Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the trade setup, the outlook on metal shares, and of course, we'll also be getting your stock-related queries answered by our expert on the show. So if you have any queries, shoot them on our live feed and we'll have them addressed. But before all that, let's take a look at the top headlines at this hour. Hours after Swiss National Bank says it will support Credit Suisse if needed, the crisis-hit bank says it will borrow $54 billion from the central bank. Fears of a banking crisis spread to Europe after Credit Suisse investor Saudi National Bank ruled out further assistance, sparking a sell-off in European markets. Wall Street ends off session lows on earlier reports that Swiss National Bank may extend liquidity support to Credit Suisse. Stock futures edge up as reports are confirmed. Meanwhile, Goldman Sachs lowers its growth forecast for US, citing a pullback in lending from small and mid-sized banks. Asian markets open with a gap down but recover to trade off session lows. SGX Nifty is indicating a slightly higher open for the Indian market. Fears of a banking crisis hitting demand see Brent crude slip over 4% to under $75 a barrel. Now, this is the lowest level since December 2021. Meanwhile, gold surges in safe haven buying as risk appetite diminishes. Also on the show today, should you be buying metal stocks now? And stocks in focus today are Reliance Industries and Samvardhana Motherson. Well, without any delay, let's bring on board our technical guest for today. Osho Krishan from Angel One is joining in this morning. Good morning, Osho. Good to have you on the show. Yesterday we saw the Nifty open gap up above that 17,200 mark, but then by the end of the day, we erased all of those gains and in fact ended sub 17,000 levels. This morning, SGX Nifty hinting at a pretty, flattish start with a positive bias. But, this trend of the gains not sustaining, do you expect that trend to continue? And what are the support levels for Nifty in today's session?
First of all, very good morning to you and all the viewers of Moneycontrol. Looking at the overall setup of Nifty, yes, we have seen a strong buying interest in yesterday's opening bell, but as we have seen that it has not sustained on the higher levels and consecutively it went down to even retest or even breach the psychological mark of 17,000. So that has dented the sentiments a lot. Because if we look at the overall setup, technical setup, then technical setup still suggests that the market is in downtrend with the lower lows, lower highs pattern. But on technical pattern, the time we dented 17,000 psychological mark, it has given a huge dampening over the participants. Looking at the overall Bank Nifty perspective, Bank Nifty has also been one of the major leader or one of the major underperformer in yesterday's session. So we are expecting that our market can be underperformed even for today. But on the lower end, we are having a very strong support, which is very nearby. That is 16,900 is expected to act as a very strong support. So from here onwards, we are not looking much downside in Nifty, because if we will look the overall data, then the long short ratio, that means the FIIs have already shorted the market a lot. The long short ratio has declined towards 12% approximately. So that's a very positive construction that we can see on the derivative part. So anything below 20 is constituted to be a very positive development, and the long short ratios have depleted towards 12%. The put call ratio has decreased below 0.7%. So that's a very positive construction on the derivative part. So we are expecting that in today's session, as this is a weekly expiry, so some kind of respite can be seen in terms of short covering, because we have seen a lot of positions from past 5 days. The market has been in the downtrend. So there has been a lot of positions on the short side. So today we can expect some kind of short covering in the latter half of the market. And overall, the picture from the global market is still not clear that global market will recover from here onwards or not. So mirroring to the global market, we are still on a very bleak note and having a very tentative approach. One should not be very much aggressive in our market for short positions as of now, because for Nifty, we are having a very strong support and at a very nearby levels of 16,900.
Right, so 16,900 is the near-term support for the Nifty. But remember, the index is below that 20 DMA, 20 EMA and SMA as well. Hold that thought, Osho. We'll come back to you. But let's also touch base with Jatin Damania of Kotak Securities to understand whether this is the right time to buy into metal shares. Good morning, Jatin. Good to have you on the show. Brokerages of late have turned bullish on the metals basket. They believe that its underperformance over global peers may in fact be an opportunity to buy into some of these stocks. What's your own view at Kotak, and what are valuations looking attractive now? Should one look at buying some of these stocks?
Good morning, everyone. I mean, from a Kotak Securities point of view, if you look, yes, there is a value in the metal stock, but not at a broad level. So as a house, we believe that, yes, margins will recover further in the coming quarters after a mild recovery, what we had witnessed in third quarter. Now, this will be led by the recent price hikes taken by the various commodities companies, stable raw material costs, and operating leverage on a stronger volume. Now, coming to a stock specific, we believe that from the Kotak Securities point of view, we don't see a broad base or the risk reward attractive across the stock universe for the metals and mining. But yes, from the stock that we cover, we have positive on Tata Steel with a target price of 130. We have a buy on NMDC, and at where we see a risk reward favorable for in the metals universe.
Well, the risk reward looks favorable for some of the stocks in the metal universe. Now, Jatin, despite China opening up, demand hasn't really picked up, as was being expected widely. But the recent Chinese economic data has been pretty encouraging. In light of this, where do you expect global commodity prices to head from here?
So if you look from the Chinese data perspective, yes, prior to the New Year holidays, there was a narrative that the demand will pick up and we'll see an improvement in the spreads and the prices. But from the China and that the government has moderated the GDP growth target of 5% for calendar year 23. However, we believe that the higher new urban employment target and fiscal deficit, whereas economic growth appears to be the top priority for the government. And as a result, we believe that the current spreads in China are below their mean, and any recovery in the demand shall support this spreads, and which augurs well for the entire industry. So definitely, we believe that still spreads are below the mean, and we'll see a recover from the second half of calendar year 23 that augurs well for the domestic industry as well. But if you come from the aluminium front, from the China, there is no evidence as of now on the strong demand pickup after the New Year holiday. So now, since the entire hopes recovery starts from second half of the calendar year, we expect aluminium prices to remain a range bound and shall be in the range of 2,400 to 2,450 for next 2 financial year.
Right. Jatin, let's also talk about the earnings picture. Do you think the downgrade cycle is largely over for some of the steel companies, and the recent recovery in steel prices would drive gradual earnings improvement for steel makers? But there are demand concerns in US and Europe in the face of a looming recession. Do you think companies are well poised in terms of leverage in case a downturn hits?
Well, good question. So if you look from the leverage perspective, since last 2 years or 3 years, if you have seen, the steel companies have deleveraged significantly over FY 20 to 22. So overall net debt to EBITDA prior to 20 was about 2.5x for the entire industry, and which has come down below 2x. So we believe that definitely, given the current downturn, even if we see the steel companies in the domestic market are pretty well positioned in terms of their balance sheet, in terms of their debt. And yes, we as a Kotak Securities also expect that margin to recover gradually from the current quarter onwards, from the mild recovery what we have seen in the third quarter, largely led by the recent price hike which you rightly mentioned.
Right. Let's talk specifically about Vedanta. There are debt concerns, there's a debt overhang, there's a lot of uncertainty around transfer of zinc business. But given the diverse metals basket it has and high dividend yield, would you still advise investors to look at this counter? And, this morning there are reports that the company is looking to raise $1 billion from various creditors, and it has already started repaying some of its creditors as well. So in light of all these developments, how does Vedanta look to you?
So definitely the payment to the creditors is a good news. But if you look the divestment, the Zinc International divestment for $3 billion, we believe it's a value accretive for Vedanta if it approved by the shareholders. So definitely if this happens, it will be further help the parents to bring down their debt significantly once the deal gets through. But we believe that current valuation, it's trading at a rich valuation, and we have a sell rating on a Vedanta with a fair value of 240.
Right, a sell call on Vedanta. Well, with that, Jatin, thanks a lot for taking out time and joining us this morning and answering all our queries. Well, with that, let's go back to Osho and discuss specific stocks. Let me first get in your thoughts on Indigo. There's been a brokerage report on the counter. In fact, Jefferies has initiated with an underperform rating and a target of 1,600 rupees or thereabouts. It believes that the Indigo is dominant in a fast-growing Indian aviation market. Even though it does face some kind of headwind in the medium term, but the long-term picture looks pretty good according to Jefferies. What are your own thoughts on this stock, Indigo, going forward, Osho?
Technically, what we have seen that Indigo has corrected from the levels of approximately 2150 and is approximately consolidating in the range of around 1900. So from here onwards, it is at a very strong support of 200-day SMA, which is at the same levels of 1900. So we are expecting that there should not be a very strong upsurge, but looking at the overall consolidation phase, if there will be any breakdown, it should give a breakdown below the levels of 1840 on a closing basis, and that too for the target of approximately 1720. So for the short term, we are not very much bearish, either bullish in the counter, because on the higher end also, if there will be any kind of a breakout, then it will be happening above 1940 levels, and that is not very drastic. We are expecting that it should move towards 2100 levels. So overall, it is in a sideways zone and it is consolidating in a very narrow range from past 10 days. So there we can witness a kind of consolidation breakout on either side, and accordingly we have to act upon it, that whether it should be on a higher end or on a lower end. But looking at the recent technical data, one should not be aggressive approximately even if it closes above 1900, and on the downside 1840, below 1840, one should short the counter for the target of 1720, 1740 for short-term perspective.
Well, short the counter around 1840, that's the call. Let's also talk about Samvardhana Motherson. That's the stock of the day for me today, because Sumitomo Wiring is looking to sell somewhere around 3.4% stake via a block deal in the counter. That's according to reports, and floor price has been set at around that 70 rupees a share mark. The deal size, mind you, is somewhere around $195 million or thereabouts. Now, the stock was under pressure in yesterday's session, down about 3% or so. Over the last 5 days, it has lost to the tune of 8% or so. Do you expect more weakness to kick in light of this block deal?
See, overall, yesterday's session was very critical for this counter because it has given a negative crossover in yesterday's trading session. So basically, this means that there could be some downside in this counter in the near term. But on the downside, the expected target or expected support that one can look is of 70 to 72 levels. So 70, 72 is the immediate support for this counter. And if there will be any kind of upsurge in this, then from here onwards, we can witness a resistance approximately around 82 points.
Right, so that's the call on Samvardhana Motherson. Let's also speak about Reliance Industries. That stock has hit a 52-week lows, and we are getting queries on the show on this stock. Jaga Jagdish wants your thoughts on this counter, and Sukruta Bhide. These two people have queries on Reliance Industries. Now the stock is around a 52-week low. It has been, on the losing side over the last couple of weeks or thereabouts. Where would you expect the stock to head from here? And what should one do with this counter now?
Technically, for Reliance, 2300 level was a very critical zone, because 2300 historically has proven to be a very strong demand zone. But in the last two trading sessions, we have seen that 2300 has been breached on a decisive manner, and the stock has plunged approximately 2% in the last trading session. So from here onwards, as the critical and the very key support has been broken, so we might expect the plunge to continue. But on the downside, 2170, 2180 should be the immediate support. And from there onwards, we can see some kind of relief in the counter, because overall, we are not very much bearish in Indian equity. So if Reliance will be having a very negative impact, then obviously Nifty will not going to improve from here onwards. So the there is a limitation on the downside. 2170, 2180 is the immediate support. If the stock comes around those levels, then one can even see to accumulate this for short to medium term perspective.
Right, so 2170 around is a good support for Reliance Industries. Let's also talk about Asian Paints. So we have a query coming in from one of our viewers. Kondareddy Dushyant has written in and he wants to know your thoughts on Asian Paints. Now, slide in crude prices, it's helping all these paint companies like Asian Paints, Berger Paints. Yesterday we saw Asian Paints gain somewhere around 3% in a very weak market. Would you see more comfort coming in from the slide in crude prices, and what are the levels one should be watching out for on this counter?
See, the painting counter is on, it should be on the radar because these counters can rally from here onwards on a significant basis. As we have seen yesterday also, when the market were on the downside, Asian Paint has approximately surged 3%, and that was backed with the volumes. So from here onwards, we can expect the surge to continue. On the higher end, the specific level that one should keep on in a radar is 2860. Once it breaches 2860, then from here onwards, we can see a rally towards 3000 level. So above 2860, one should initiate a long call in Asian Paint for the immediate target of 3000. So we are very much bullish in the painting counters for the time being.
Right, bullish on the paint counters for the time being. Let's also shift focus to the auto pack. We are getting queries on Eicher Motors this morning. Maheshwar Banu has written in, and we also have another query from Ramesh coming in. Is it a good time to average this counter now, Osho?
See, overall, this counter has shown a lot of selling pressure from the levels of approximately 3,300 levels and currently hovering around 3,000. But still, there is no respite from the sell-off. The counter is still having some downside. So one should wait for the counter to consolidate and have a very decent reversal kind of a pattern. As of now, on technical chart, there is no confirmation on any reversal. So one should wait for either consolidation or the sell-off in the overall market to get stopped. Then from there onwards, one can start accumulating, but in a staggered manner. Because from long-term perspective, the counter has the potential to even outperform the benchmark index. So one should keep this in their radar, but obviously not at these levels. Once the sell-off in the market stops, then one can start accumulating in a staggered manner.
Well, once the sell-off stops, start accumulating in a staggered manner. The next query is coming in on Bank of India. Now, we know that banking pack has been, bearing the brunt of the global concerns emerging around, Silicon Valley Bank and now Credit Suisse. So, banking has been one pack that has been hammered out of shape over the last few days in the kind of sell-off that we've seen in the market. Karthik Raja wants to know your thoughts on Bank of India. Now, this stock has lost somewhere around 13% over the last 5 sessions. If this slides more, would it be a good time to enter into this counter?
See, overall, the banking space is facing a lot of selling pressure, and specifically the PSU banks. Even for Bank of India, we have witnessed that from the levels of 82, 84, the stock has plunged towards 70 odd zone, and still the downside is still pending towards the level of 65. So one should not be very much aggressive in overall banking space as of now. Any consolidation near the zone of 65, which is the 200-day SMA, one should start accumulating from medium-term perspective, not very aggressively, so that they can get a decent return in a short-term perspective. So one should accumulate from medium to long-term perspective on the critical support of approximately 64, 65 levels.
Right. The next query is coming in on IEX. Deepshikha has written in. Now, this counter, of course, has been rallying on the back of falling crude prices. We've seen the stock gain 4.5% yesterday. In fact, over the last 1 month, it has gained somewhere around 10 to 11%. Now, Deepshikha wants to know whether this counter can edge up to that 290, 300 level in the long term, around 3 to 5 years. What would you say?
See, overall, the fundamental of this company is very good. For longer term perspective, one should keep accumulating this counter because these levels are very discounted price for the counter. But for short term, what we have seen that it has came out from the consolidation zone of approximately 140 to 148 levels, and that on the back of robust volume. So from here onwards, even in short term, one can expect the rally to continue for the immediate upside of 160, 162 zone. But for longer period, one should definitely stay invested in this counter for a very decent return. The target for longer term will be difficult to say as of now, but for short term, 160 to 165 should be the immediate target. And once the stock surpasses those levels, then we need to review the same from longer term perspective.
Well, I want to ask you last two queries. One on Balrampur Chini. Karan Mahatre has written in and he wants to know your thoughts on this counter. And lastly, view on Tilak Nagar Industries. These two counters, if you can, respond to these two queries from our viewers.
Balrampur Chini has recently seen a strong gain from the levels of approximately 370 and has rallied towards the 400 odd zone. And from here onwards also the overall correction in the market has dampened or dented the overall sentiment in this counter. So this counter has corrected from the levels of 400 to 480, but 475 to 480 will be a very decent levels to buy the counter. Even in aggressive market, or even if the market was on a subdued or positive note, then I would have suggested to accumulate at 385 levels only. But as there has been some kind of selling pressure in the overall market, so one should wait for the dip towards 375 to 380 levels, and then again one can accumulate for immediate target of 400. And once we see a decent breach above 400 levels, then again it can rally towards 415 to 420 from short-term perspective. And can you please repeat the other stock which you have asked?
I had asked you about Tilak Nagar Industries.
Tilak Nagar Industry, overall the technical structure is very positive, but from recent, let's say 10 trading session, the stock has corrected from 120 to 100 odd zone. On the downside, we might expect the sell-off to get stopped near the levels of 94, 95. And again, from there onwards, one can start accumulating because overall technical parameters are on a bit on the oversold region. So from here onwards, one can expect a decent rally in this counter, but one should wait for those levels to get triggered and then accumulate from short to medium term perspective.
Right, Osho, thanks a lot for answering all of your queries. We are running out of time. So before I let you go, leave us with two stock recommendations for our viewers this morning.
The first one is from the power generation industry, that is Power Grid. Power Grid is looking very aggressive. Even in yesterday's trading session, it was at its day's high till the last minute of the trading session. So Power Grid is looking very aggressive. One should accumulate Power Grid around the levels of 227, 228. For the upside target of 235 should be the immediate target, which is the 52 weeks high, followed by 238. And the stop loss one should maintain around 222, which is the swing low of the day before yesterday's session. The second counter is from the paint industry, that is Berger Paint. Berger Paint is looking very aggressive, and as I have mentioned before also, that paint industry can improve from here onwards on the basis of decline in the crude oil prices. So Berger Paint is looking very aggressive. One should accumulate on any dip towards 585, keeping a strict stop loss of 570. For the immediate target that we are expecting is of 600, and surpassing 600, it can even test 615 to 620 from short-term perspective.
Right, Power Grid and Berger Paints, two stock recommendations coming in from Osho this morning. Well, with that, Osho, thanks a lot for taking out time and joining us and addressing all of your queries this morning. Well, with that, we are completely timed out on this edition of Morning Trade, but I would like to wish my producer, Sandeep Gadihog, a very happy birthday. Well, with that, coming up next is Opening Bell, so stay tuned, don't go anywhere. It's a goodbye from me for now.